say no more. And when you say no more.
Hello, Jitters. Happy Monday. And just going to look at the markets, across the markets like we do every day. And we just start with this one. Bitcoin's the default. No movement, up 0.17%. Stuck within a range for half the year or more. And that's it. So when Bitcoin has done nothing on the day, the altcoins are going to be a mixed bag. Mostly they're up today. I mean, storage up almost 13%. Chainlink up 7%, so that was pretty cool. But that's kind of it. I mean, YFI is up 2%. Maker's up almost 4%. And somehow there are some S coins that are down, like Crow and KNC and ZRX and QNT. QNT making, I think, like 52-week lows maybe, or at least the lowest low of the year 2023. Shiba's down, EOS down, who cares? All right, so that's it. Maybe, just maybe, unless the bids start coming in soon, you have to discuss the reality potentially developing on the RSI where you've got a high. Right, you've got a high from August 29th of around, I mean, with the close, 27.8. And now we potentially have a lower high, right? And what's the RSI doing? It's higher. So that's hidden bearish divergence potentially. So it could be implied continuation downward next if, again, we're not fortunate with bids where, Michael Saylor came in and bought, over $100 million worth of Bitcoin or something today, or it was announced, and then some news-driven catalyst about what Shanghai, they're saying that Bitcoin's now protected currency or something. It's all a joke. Don't ever trust anything from communist China. Any news from them is probably them trying to screw Westerners, to induce buying from Westerners so they could offload a position. I'm just saying based on history, because we get these little news events every year and from China, and it's never good. Like, the price never goes up when the communist Chinese government announces something positive about crypto. So I wouldn't trust it at all. You shouldn't even really care. It's just something that happened, and those are two potentially good things, right? And why did the price not move any? Where is everyone? Why are the buyers not coming into Bitcoin? A double whammy, a positive news today. It's just not. I mean, like, I hope buyers continue to defend 25,350, but they've done it twice now. And where is everyone? You've confirmed that level is support, and there's just no follow through, and only locally a lower high, and how somehow hidden bearish divergence starting to develop. And it's just weird, really weird vibes here, man. Anyway, so that's Bitcoin. I mean, I know it's riveting stuff. Should have been crazier and wasn't. And here's Ethereum up 0.46%. I mean, look, bullish divergence is there. I'm not going to not show you and say that it's there. Look, it's there. It's perfect too. Wow. Oversold again on the second low, right? Manifesting into a lower high and rolling over, and you're just near the lows again. It's just like, this should be it. I mean, there should be demand, and there's no demand. But I understand, because key inflection point's 1420. If it rallies here, it would be rather random to pivot and run. But okay, that's your Ethereum update. I wish there was more to talk about. I mean, this is every day now. We're living in a liquidity graveyard, the crypto market, but somehow we're here covering it. So just getting it out of the way, because I cover not just crypto, covering the equities market, commodities market. We'll take a look at the bond yields today. Below and up still, mooning. Okay, we'll go to XRP, I guess. That's just hanging out. I mean, below the inflection point. Waiting. I mean, you made a low, you made the lower low on the candle close. There was really nice divergence. Divergence is still intact until I think sellers take out this 47-cent low. But that was off the divergence, and when follow through, when rally back above 51.6 cents, that's so important. When price back above 200-day simple moving average, you're below it still. So you got to be at least cautious. And if we get above 51.6 cents in time, then you could be cautiously optimistic. Yeah. Okay, this is the crypto market. Let's go to BNB. It's up 0.77%. I'm pretty sure CZ's offloading. He's been offloading his Bitcoin position to shore up the price of BNB still. And he's done a heck of a job. I mean, the price, if he wasn't doing that, the price probably would have already collapsed at this point. But here we are. Still below 211.70, which is what? The swing low from 2021, May 2021, right there. You can barely see it because the 200-day moving average is right there as well. You crashed, or you had a massive drawdown, a scrub rally, lower high than previous side, bearish back test, rolling over, same low. Look at these two lows that are lower, or these highs that are lower than this high and this high and that high. And now you're just right back again after these back tests. And it's just like, the rally's here. Wow, congrats, man. CZ did it by himself, because no one else is here buying this crap. Yep, and I mean, it's almost like you have like Class C hidden bearish divergence. Man, it's just almost like not actually, because you made like the same high on price with the exact same high on momentum and the exact same high on the RSI. Yeah, just whatever. Okay, that's crypto. Let's get out of here, man. That was just awful. Well, I guess we'll look at total market cap for Jonathan and his turtles. Jonathan, how you feel, man?
I like turtles. There's bears out here.
Okay. There it is. Still below the 50. Still below 200. Death cross. September 2nd, 3rd, whatever. I mean, is it gonna look? I'm not even looking at the oscillator. I have not looked at it. Would it be a high than the lower high with the higher levels on the oscillators? Would it be just like Bitcoin? It would. Unfortunately. Gosh dang, dude, that's not really what you're looking for. All you can do is pray that the implied continuation ends up being a joke. Just not so sure right now, man. It's not what you're looking for. So, I mean, like, if it was to play out, you think at least a test of 9.89 or 989 billion, right? Would that be 0.989 trillion? Yeah. That's where we are. That's all I got for you today. It's the same thing on the MACD, right? You get the high, then the lower high, the higher levels in the oscillator. I mean, one could maybe draw a conclusion it's developing here too, but kind of like having separation of histogram islands. Pretty close. All right. You know, so the index funds did some stuff today, and all the sectors, right? The sectors of the S&P 500, the 11, all painted, I mean, all, but like almost all painted some sort of potential reversal, whether it was an engulfing candle or piercing line reversal candle on the daily. So the S&P 500, the spider, the ETF of the S&P 500, where you're staring right in the face of a potential piercing line reversal candle, which is a bullish reversal candle. So it doesn't mean it's really valid yet. Tomorrow would give us the validation. Like if, say tomorrow there's a rally and on the daily you get a higher candle close than today's close,
yet,
should
perhaps?
be okay. Mr. Lodick, I mean, like, you know, I'm never going to act like I know if a bottom's in for anything ever. So why would I do it for virtually a scam? You know, a cult leader scam. No one's buying it, I'll tell you that. It hit that key inflection point from years ago, and it bounced a couple times and made lower highs, and it was rolled over, and it's near those lows again. It's like no one's there to pick it up, not yet. Maybe they will. Just yeah, we can look at the hex chart if that's what you want, Lodick. Thank you. Matt Damon vibes. What's that, man? What you talking about? Crypto.com. Portion favors the wrecked. That is certain if you were an altcoin holder over the past couple of years. Yes. All right. So potential piercing line. Let's see if we get follow through tomorrow to confirm it, because you know that's just the rule of Japanese candlesticks, especially on the daily or any candle. It's like whatever the next close is would give us more information of this potential reversal's validity. Unfilled gap at 438. That's reasonable. I mean, you go up to 450 and there's another unfilled gap there. I mean, those rallies could occur and you could still end up putting a lower high than the previous highs. So that's how these markets go now, especially index funds. God. You got pretty close to the inflection zone, 420, 426, but you never quite got there. So Negatomomo is still building. All right. And still in this uptrend, near oversold. Okay. MK Ultra, you know that's not real food, right? It's like not real. It's like slop. Anyway, all right. So here's the Dow Jones Industrial Average that did today, intraday, made its lowest price since July 10th. But then rallied to close the day above Friday's close, right? Closed higher. And it could be a piercing line, potentially. I don't think it made it 50% through the previous. That's the rule of the piercing line, is the candle must pierce through at least 50% of the candle. Bukowski talks about 65% of the candle too. And it didn't do that for sure. Maybe 50. So it probably whatever the S&P does, Dow Jones will do too. But tested the 200-day simple moving average intraday for the first time since June 1st. It's also development. But most recent events, you can see you made your highest high, then you put in a high, and then the same high. Two local highs that are lower than the previous high, which is distribution confirmed. And now you've, in fact, somehow made a lower low than the previous low. Oh no, don't keep doing this, man. You know what that does if you keep doing that. Don't make another lower high. Don't make another lower low. Otherwise, the trend is reversing. You potentially have it. NASDAQ Composite. Now here's a piercing line, potential piercing line, right? Where it pierced through, even over 65% of the previous candle, almost engulfed. And that's it. So tomorrow we'll be telling, will we get follow through off this? I mean, even still, I mean, an unfilled gap at 13,467. Can't really be that surprised if that fills soon. Unfilled gaps fill. That's just the way it is. And 13K has not been hit yet. Figured we would eventually test that. Hidden bearish divergence played out. Negative momentum was still building. You are in the bearish control zone on the RSI. What are you sitting around? 35, 36. All right. Put in your first lower high pretty much of the entire year of 2023. So, and that's the way it went. That's been going on the sectors of the S&P. First lower highs and stuff. NASDAQ and IWM, ETF, the Russell 2000, which intraday saw its lowest price since June 1st and filled a gap officially. Jesus chimes for that. We got ourselves a gap fill. I'm saying they eventually fill. And you did pierce. That is a potential piercing line reversal on the IWM down here. So that could manifest into a rally, but most likely wherever the rally goes, you fill the gap. It'll probably be a lower high than the high from September 1st. But yeah, head and shoulders. Okay, I got it. I'm not plotting or anything. It's there, you know. I just looking at the levels here, and I think like 170, 173 is next. Look at this song. My God, dude. Okay, so those are your index funds. Got them out of the way. Could do. Look at Rite Aid that hit all-time lows today. It is, you know, they're already gonna file for bankruptcy, but just to show you how bad it is, what, 34%, 39 cents, first time ever. And this should continue to free fall. You will get short squeezes like this. It'll come out of nowhere, and that's the thing. It's like, it's dangerous. I mean, if you have like an open short position on this, on any day, you could just wake up and this price is up 30%. And then like in the next week after being up 30%, it crashes back down and even takes out the lows and makes the lowest low ever. So it's crazy stuff down here. That's kind of the big one. Evergrande, which is 333. Hold on. Isn't it interesting? Hold on. 33333. Isn't that, yeah, Evergrande. The Hong Kong Stock Exchange right here was down 21.8%. Still off its lowest lows ever, which was August 28th, but it's on its way down. I think the former CEO, one of the other officers, they've gotten apprehended by the Chinese government. It's all saving face stuff. They are one, right? In communist China, companies are the same as the government. They are in bed together by the gun. If anyone tells you any different, they're probably communists themselves. Okay, so we continue on. Unfortunately, like Under Armour, that was looking so interesting, then it started looking not good at all locally. What happened? The bottom fell out. And Under Armour today made its lowest price in 13 years. Hold on. No, it didn't do that. What am I looking? What was I looking at? Oh yeah, it was the Under Armour UAA, which is another ticker, another classification of the stock. It made the lowest daily candle close in 13 years. You got to go all the way back. Jeez, man. Yeah, here it is. Here we are. It was the lowest close since November 18th, 2010. So not quite 13 years, but very close, pretty much. But that right there, man, when you have a completed harmonic, type 2 return, and then that's why you have to monitor these assets. These are daily candles. I mean, it was not difficult to keep paying attention to see the lower high come in. And it's almost like, what is this, like head and left shoulder, head, right shoulder? The sellers are reassuming control of the asset already. And then you had a drawdown, a sign of weakness, back to support, and then just another loser joke rally for 3 days. And then that candle right there, it's like, it's so over. This thing's probably about to go a lot lower. And here we are in the abyss. sad news for this one, but also sad news for the TLT that saw its lowest price in just about the same amount of time, but 13 years. TLT is just the bond, the 20-year Treasury bond ETF. Remember, if you buy this, you do not get the yield. Got to go to treasury.gov for that. So here it is. All right, lowest daily candle close confirmed since February 10th, 2011. Okay. And nearing this really crazy level, and I spent some time today kind of like looking back at like this to the price of the S&P during like, you know, November 07 was kind of like the first lower high getting put in, and it was the top, it was over then. And then you had that drawdown that lasted until March 2009 when the bottom got put in. And it was really hard to like, I mean, let's see, November of 2007, it was kind of like right around here when you were topping out on the S&P, and then you had been drawing down this whole time, and then you started stalling out in the summer of 2008, and then right around here is where it started drawing down. The S&P started drawing down again more violently. But then, you know, you go to March 2009 when we bottomed out, and it was just kind of like right here when again, like the consolidation happened after the blow off top on the TLT, and the S&P was done selling off forever pretty much. You know, you never saw those prices again. So it was kind of like I couldn't really draw a conclusion on this, how we could look at this chart and it would help us really with equities. It's really tough. And I think like if you did draw a conclusion, I don't think it's going to help you. It could give you a false sense of like security on what you think might be reality. So just anyway, this is just getting wrecked. Okay. And then I guess if we're looking at this, we might as well just look at the yields, which we can just start with the 10-year. 10-year, as you can see, the highest daily candle close and the highest price since October of 2007. Looks like you got one little overhead resistance. Look at this, September 2003, March 2005, November 2005, and that's kind of it. So that's a big resistance upon you at 4.619%, and that's like nothing. Percentage wise, it's like 2% more till you see some sort of real resistance, and then above that's 5.18% to 5.2%.
After I win in November, I'm going to party at Club Space in Miami and dance to some beats. You should be my VIP. It will be huge.
Agent Orange, thanks so much for the President Trump contribution. Thank you, dude. It's a huge contribution. Huge with a Y. Thank you. Club Space. Well, we're not going to 11, man. Serious? Go to 11, then we'll go to space when the sun comes up. How about that? That's kind of like the tradition, the Miami tradition. Okay, so 10-year, 5-year. Here's your 5-year that just rivaling its highs. It's multi-year highs. Just up there, butting up against the highest level seen since 2007, August 2007. And there's a decent amount of upside. Oh, there's this, wow, it's a swing low from 1993 that you're currently, you can see the yield percentage higher than that swing low right now. So if we're going for the next swing low from history, inflection point, kind of like, look, September 1992 is 5.16, and then again in February 1996. Oh, there you go. And then it lines up with 2006, 2007. So that seems like if you could, this is a real break above this swing low here from 93. That's your upside. I mean, look, straight down and up and 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 down. I mean, like you could just see historically why it makes sense. That would be probably our next target on the 5-year. Okay, that's cool. Let's go to the 1 year. 1 year is a lot more tame. kind of been stuck in the same spot since July 4th, but still currently testing, a price is above, or percentages above the inflection point from history, 5.3%. So you'd think eventually the scan wick will come to life where we would test 6%. Go to the 2-year, same, kind of similar as the 1 year. Very elevated though. Like as of Thursday, saw its highest price in many years. And you're thinking there's just a little bit more upside, 5.2%. It's just a peak from 2006. Yeah, that's it. So, okay. Go to the 6 month. That is still extremely elevated. Same price since June 5th. Then the 3 month. Here's your 3 month. Pretty much flat since May of 2023. But somehow still making some higher closes than the previous closes. Yeah, the closer you win, closer you get in, the less insane it is, right? Here's a 20-year. Sorry, I forgot to look at that. The 20 years going kind of berserk. What a candle today or yesterday. It's a new open was a few hours ago, and that's the highest ever, highest price ever on this chart. This is insane. It's almost like the Bitcoin chart, right? All right, so yield's done. We could switch it on over to some commodities, and just a little disappointed in the metals. What could you expect? They don't do much besides disappoint these days. Where again, it's now neutral because you have a higher low than the previous low, but you have lower highs than the previous highs. So it's no longer like, ooh, this looks really good. No, it's more like you just fell back below 1920, which is the 2011 peak. You just had a bearish engulfing candle. You just fell back below the 200-day moving average. You just fell back below the supply line. Everything that was good about the date of September 18th, it is now completely gone. Anything that was hopish, good, bullish is now equal and opposite. We're back to, oh no, we suck again. Rob Schneider, for sure. It's definitely a Rob Schneider meme right here on gold. That's like the worst thing that could ever happen because you just killed 3-4 birds with one stone. And you got bearish convergence, negative momentum has begun to build again. RSI is neutral. Come on, man. Really? Okay, that's not really what you want to see. If you put in a higher low, you got to make a higher high. You didn't. You put a lower high in. Terrible price action day. Today was a terrible day for gold. Not just because, it's down like a certain, a percent. Or no, it's all the technical stuff that just got rejected. Silver below the 200-day moving average, bearish engulfing candle, and now just sitting at a key support. Put in somehow maybe a lower high than previous. It's like this becoming neutral, more neutral now. They're not. Yeah, you can be optimistic above 23, but understand how neutral it is. Copper looks really bad. Copper looks like done, son. Look, you go from 3 falling peaks into head and shoulders. Below the neckline, pretty much. Lowest daily candle close yesterday since May 25th. And there is a decent amount of downside here. Your trend reversed, though. You are in a downtrend now. You've made the consecutive lower highs, lower lows. All of this right here, this consolidation, is all lower than this high, and it's a downtrend. You're below the 200 moving average. You put in another fresh lower high. Sellers have reassumed control of this asset. I said reconsumed because reassumed and control combined. Reconsumed. Just kidding. All right, I have these headphones on. They're noise canceling, so it's kind of hard to hear myself talk a little bit. Yeah, metals are just not good markets, man. And so platinum also the same thing, where it's just, you put in a higher low to put in a lower high to bearishly engulf back below 926. You're neutral now. You're not optimistic. You're neutral. You know this is pretty much a coin flip. the argument for the buyer's side is not invalid until 892 is taken out. But I guess the seller's side is not really taken out until you take out $1,000. So it's neutral. Lowest daily close since the 14th of this month. Okay. We look at U.S. oil. So elevated and probably not done. Any pullback will most likely manifest into a higher low than the low we saw on August 24th with that bullish back test at the key inflection point. So freight train gonna freight train, and this will kill economies across the world. Yeah, elevated oil prices, yeah. Recession real fast. This keeps up. Gasoline futures though, oh, it's dumping, man. Lower high here. No gap fill. Interesting. I mean, I'd love to see this lower high turn into a dump here, a big dump, because it's just interesting. Back below the 200-day moving average, more bearish convergence, and now sitting at this key 248, 250 level. If you break that, I mean 220 easy. You gotta wonder. I mean, like devil's advocate here, because you know continuation harmonics are great if the price action's there and you catch follow through. Is this really following through? I thought like you reassuming control of the market with the higher low and then a higher high, but then a pretty nasty sell off and then a lower high. And I was like, are we looking at? Oh my God, are we looking at this? It's just like a big old rising wedge. I mean, this is the buyers. Remember, anytime you have a drawdown like this, it is then the selling will subside eventually. The buyers will take back over, and they're now on the clock to put in their argument for if they're going to take this trend back over by taking out the previous high. They haven't even come close. Mother of God. I mean, if that's not like textbook rising wedge, I don't know what is. My God, that supply level tested perfectly. You gotta look at it both ways, and that's like right at that demand line too. Good God. Okay. I hope this plays out, because this is a chart that would kill all our economies. I mean, all of them did. Gasoline futures, the average, national average in the United States. So we want this rising wedge to play out brilliantly and collapse. Impulse phase, consolidation phase. You're in the consolidation phase still. You can clearly see that. So the next impulse, that will be resolution of the consolidation phase. And we know this one pretty well, right? A rising wedge continuation. I hope so. Yeah, our RB1 exclamation mark is gasoline futures. Again, it is the national average at the pump for unleaded gas, and just 89, right? Not premium. I wonder if there's a premium gas futures chart. It's probably not on TradingView. There's a pineapples futures chart, but I don't think it's on TradingView, nor is olive oil. They're not on TradingView. I wish they'd put them on. That'd be great, man. I'd love to add to my arsenal of commodities, where live cattle futures is the stupidest thing of stupid. It did not quite close at its highest price ever today. Just rivaled the highest. I mean, you're just sitting at all-time highs every day, September 15th to now. 186.97. You will eat the bugs. Your bearish divergence will be invalidated almost instantly, and yeah, this is a joke. It's insane, and it's not. This is crazy, but also look at live cattle futures. What you feed the cattle is pretty much at all-time highs. But yeah, I mean, like, you think traditional markets, this is traditional market, which is crazy. That's what's so insane. Like, all these things like that are developing for reversals, they're just not playing out. They're not even budging. And it's like, you look at this like, oh, of course, it could be some sort of like wedge or something. One high, the second high, the third high. And it's just like lower levels of RSI every time. Your bearish divergence class A. probably Class B, bearish divergence, the MACD. It's not been mattering at all. So it's like short graveyard on this, man. Crazy. Look at this beautiful channel and just busts out like it was nothing. And all the, the food commodities today, they were up. I mean, like cotton, or not cotton, not food. I don't know, I eat cotton sometimes. But you gotta wonder if this is some sort of accumulation trading range. The breakout point of that trading range would be 89.40. There's a big inflection zone just above that, so you can't really get that excited if it does break out. But yeah, it seems like a bottom got put in and only higher lows, so more than before. More market participants taking ownership of cotton futures than you saw at the nadir in October 2022. You got wheat futures that just on Thursday made its multi-year lows, right? Its lowest close since December 2020, and had been in a very well-established downtrend with only lower highs no matter what. I mean, you make the same highs, it just confirms the lower high than previous highs. So yeah, nice day today. Like just random, and you get that. It happens. Corn futures. Maybe the divergence will start playing out. I mean, it's just in such a well-established downtrend, like it's hard to, because you identify something bullish, it might be reliable, probably won't even be reliable, but if it is reliable, it will underperform miserably. So this divergence and maybe this pivot here could turn into 522 bearish back test, put in a lower high than previous high, and then roll over later. So corn and wheat and cotton and soybeans here. Remember, we're thinking this one's, I gotta get rid of this one. The one I do is the other one. ZS, yeah. Where you look at this and you think everything's good, but then the new piece of data is the lowest high of the entire downtrend that was very well established. And now your sign of weakness is coming back down pretty dramatically, rapidly to test this level. After this piece of data, you would think that what's going on is absorption of the remaining demand at this ice line. And once the demand is completely absorbed at 1289, 1290, 1300, you'd see a fresh markdown to 1185, 1200. And that would set the stage for that complex wave structure that you're seeing here, maybe, where you got the deep 786 lower high on C, and then the 1272 minimum. Oh, that's like TA Tetris, right? A 1272 on a butterfly. Trend's your friend, but you are at support. And again, this is a level of congestion, right? There's traffic here. There's buyers, there's sellers, there's shorts covering, all kinds of stuff going on at inflection points. So it's not always just going to be a clean break. Clean breaks are like capitulation. So yeah, even a pivot happens and you rally off this level again because there was just too much demand. Still, a rally could ensue, and then another lower high gets put in, and then that's like when you're on notice. You come back down to that level. It's really high probability you're going to break down. Okay, so commodities, hogs didn't do too well last week, towards the end of the week, but still above that major inflection point, the area where you can manage your risk so well. It's kind of disappointing, right? I mean, like if my steak's gonna cost a fortune, shouldn't my bacon cost a fortune too? Just kidding, because this chart is not relevant to how much bacon costs at the grocery store. Oh, look at natural gas, yeah, too. And we'll get to that one request, and then whatever, we got about 15 minutes till your daily candle close. If you're enjoying the stream, like button, bell, sub, whatever. Doesn't matter if you do it or not. I don't really care. 267 is the big line in the sand on this one, and you're currently trading below that. Based on the price action stalling like this, I'm going with more neutral, because this could just end up becoming like some big trading range, and you're near the top of the trading range and you've failed to break out, and you've just put in two highs lower than the previous high. confirming the distribution there. So if this asset, if natural gas was to mark down to 216 again after all this price action, I would not be surprised at all. And that's okay. Look. Remember the trend. What was the context? Just massively crashing, being in a bear trend. Yeah. So you can't really be surprised if we come back down to 216 after what I've just identified, the pieces of data, the complexity here, the highs, the highest high, then the two lower highs than this high that rival these highs. Complex head and shoulders behavior. Again, though, I'm not like, if it keeps going too, I'm not going to be that surprised because you hit the basement, dude. This thing crashed like Terra Luna did, just about. Still well below that 200-day moving average. You can see you haven't even touched it yet. Last time you've even touched the 200-day simple moving average was December 13th of last year. Okay, cool. Maybe it is just a range. U.S. Steel, which is advertising on Twitter, apparently.
The ultra wealthy are consolidating assets. It is going to take a while to truly get rid of the middle class. First, we have to force them over from oil to electricity. Second, we have to make them thankful to eat anything we provide. Third, we have a market crash keeping them poor.
Interesting. Thank you, Shadow Mitch. Trump. Thank you. Yeah, I mean, it is a long process, but they're currently working on it, and they've expedited it clearly based on what they're doing with immigration across the West, right? Yeah, you destabilize the countries by, these are like, most of the West is pretty much socialized, right? I mean, like, to some degree, one sector with the healthcare or anything is, funded by taxpayers. And then when you bring in a bunch of people and you start using those taxpayers' resources on third world immigrants, that will destabilize things. Then you got elevated crime. But yeah, then you got like the war on food, right? Where they're like all these different countries. You've got governments culling hundreds of thousands of cattle, animals, right? Yeah, you take control of the farmland, then you control the people, and then they've been working on the central bank digital currency. So they got you covered on the financial side, the food side, complete control. I mean, that's these shadowy elites behind the scenes. We know them. It's the World Economic Forum. It's the non-governmental organizations pushing all this stuff. It's very scary, and it's just so wild that they have this much power consolidated. It's like, what have we been doing? We've been so asleep. It's like Sauron, dude. Sauron's back. Like, we defeated Sauron in the 1940s. Nah, Sauron's back, dude. And people are like rooting for the orcs. Oh man, the orcs, I mean, it's crazy. Tolkien actually did have an epilogue. Like, he was starting to write an epilogue book of Lord of the Rings, but he decided to stop because he just said, you know what, man, I don't want to taint this amazing lore that ended with a happy ending. He didn't want to continue, but unfortunately, Sir Tolkien, reality continues long after you passed. Yeah, and in the book, it talks about like literally like the kids, they're so far removed from the last war for Middle Earth that like kids, like they're like role playing as orcs, humanizing orcs, which were just literally, they were elves that were corrupted by Morgoth and Sauron, right? So, okay, so look, U.S. Steel has broken out above $32. That was the highest daily candle close on U.S. Steel today since April of 2022. Wow, 52-week highs. And this is kind of like Wyckoff reaccumulation. And I'm thinking like, if this is real, dude, I mean, 38, 39, but maybe 44, $46 up there. Okay, it's just commodities. What was their request? Okay, the only request of the day was Hex. I'll just get rid of the tip jar forever. Dude, it's over, man. Like, it's like this whole thing's... This thing I've been doing is like... The color of the trees are orange. The leaves are falling. That's the way it feels. Hex. There it is. Is the bottom in for Hex from Mr. Loaded? Again, it looks like BNB locally, which is not good, but right, you're in a like collapse trend, a bear trend, like the bear is on cocaine. It's a cocaine bear trend. And the most recent discernible events you could see would be obviously the lowest low in August, the lowest low of the entire cocaine bear
asked
trend.
me. The ticker NG1 appeared different from the ticker labeled natural gas, which has really gone for it over the last 2 days. Ah, the mysterious ticker NG1. It seems as enigmatic as the ancient texts I once deciphered. As for natural gas, its recensurgi reminds me of the fiery infernos of hell itself. Quite the spectacle, I must admit.
Wow, Deckard Kane, thank you so much for the very, very astute contribution. The natural gas chart's different than NG1. I'll try to look at that after this. Thank you. Thank you. Be careful out there. Don't go die to a... What they do? They killed him with a butterfly woman or something. Typical joke Blizzard. Yeah, it's like Activision Blizzard, not Blizzard North. Blizzard North developed Diablo 2. Then Activision came in and just completely destroyed all of Diablo. But that's the thing, man. Evil cannot create. They can merely corrupt and warp what was once good. So the lowest low, and then the lowest high, then a slightly higher low. What? But unfortunately, after the lower high, only the lowest high again of the entire downtrend. That's your most recent discernible event. And you're just sitting here, you're above 0.3 cents. Think that'd be tested again, even if it holds. That's just the top end of that little inflection zone, right? I'll make it gray here. There it is, right? Just tip top. Let's hit the bit bot.
Dear Mitch, thank you. Thank you for your consistency. Thank you for always presenting data. The real people of the community appreciate all your efforts. Everyone watching, join Patreon!
What's up, Shadow Mitch? Thanks for the 10G and the advocacy for the Patreon. Yeah, I mean, oh, and speaking of that, real quick, at G-Dog and what else? It was G-Dog and All Quiet at the crypto front. Thank y'all so much for renewing your support for this community and channel. Yeah, 100% crowdsourced. And without that, I'm on my own, so I don't push scams. So that's cool, man. But it proves, like, man, not selling out, actually, there's no, like, glorious end of tunnel, Jesus picks me up, and I get to 1 million subs. It doesn't work. No, that's not how reality works, unfortunately. Now, the more degenerate you are is kind of what is pushed in society now, and it's really sad, because that is a direct way that the powers that be will destroy the nuclear family, all that stuff. It's such a psyop, man, and it's so complex, and it's on every front. Okay, so Hex, you'd think 0.3 cents again, and then eventually 2.8 cents, which would take you to the bottom, and then I don't know, man, like, you're at a point where someone could be like, hey, man, yes, a reversal based on history. Down there when buyers defended that level before, it went straight up to 0.5 cents. But then straight back down to 2.8 cents, straight back up to 0.5 cents, back down, up, down, up. So you think, well, maybe that could happen again. It hasn't happened yet, and that's what I'm saying. Like, the price action you got off that level was there, but it was a joke. There was not enough demand to push the price back to the next level. That is undeniable. It is indubitable. It's right there for May of 2020. Not enough demand. So rolling over and just putting another lower high. It's garbage right now. And I mean, I'm sure there's a little M shape here. You got the 4 hour. I bet you see it really well. Yeah, let's do it. Let's just be really nice here to not offend anybody. You had an M shape. What was it? It was a Gartley. It was a Gartley-Bartley. We know him so well. And that's it, yeah. So, it could be a bottom, dude. Probably the only one in the world identifying a 4 hour bullish harmonic on Hex coin. There it is. I don't know if it'll play out. It reacted. You got a reaction for sure. 886, right? Oh, is that a type 2? No, I don't know, man. Like, is it a type 2? Did it hit a 382 from the high to low? Yeah, I guess it'd be a type 2. All right. So you're at support, near support. You've completed a harmonic. There could be a confirmation low at the harmonics pattern completion zone. So this would be like, if it was going to reverse, it's now. But I'd have zero confidence in this asset. Zero confidence that this will play out because the trend is so hyper bearish. All it does is make lower highs, lower lows. And remember, the creator and founder of this coin is, under investigation for fraud. So
just wait. Soon all the regular Muppets will be tuning in again and asking that age-old stupid question.
Should I buy now?
Should I buy now? What should I buy? Loki was right. All of the idiot sandwiches love to be subjugated.
Thank you, Shadow Mitch, for the kind words. Hey, man, I mean, like, I'm not even... I just don't even know, like, anymore with the way they've changed the algorithms if Bitcoin ever recovered, like, one day, maybe 10 years from now, God. If like the viewership will come back. It's just like it would have to be a long sustained period of higher highs, higher lows. It can't just be one pump and dump, like, because that's all we get now on Bitcoin for the rallies. So there's nothing to sustain. So that's what it would have to be. It would have to be like literally we've reversed and we're in an uptrend. We've been in an uptrend on Bitcoin. There's no taking that away. You can't take that away from Bitcoin until the price falls below 24,700. Right, it's not over till the fat lady sings. It's not over till the previous discernible swing low is taken out, and it's here, the line in the sand on your chart. Less than 1 minute till the.
Hype in the chat.
What's this? Sorry. Google Needs. Yeah, I mean. It's just like composite operator picked up the phone, the bullish composite operator today made 2 phone calls. No one answered. It's kind of concerning. The whole Shanghai news and Michael Saylor and MicroStrategy purchasing stupid amounts of Bitcoin and no movement at all. It's just like, that's not how it should go. It should be the other way around. It should be like the Square and PayPal news where we're getting huge green
Seriously,
candles.
you guys, every time Bitcoin goes down, in comes Michael Saylor, swooping in like he's some kind of superhero or something. Ooh, look at me. I am Michael Saylor. I'm gonna save the day with my small brain and my Bitcoins. Shh, whatever. I'm just gonna sit here and long cheesy poofs on 100x.
Cheesy poofs. There it is, the cheesy poofs. No cheesy poofs on this one. I guess it's probably on Dex Scanner, right? Cab up. Yeah, just no one called or no one answered the bullish composite man. Just yeah, okay. So but like thing is, all it takes is the bearish composite operator. All it takes is him picking up the phone and saying one bad thing. That's how close you are to collapse on BNB. Like if any bad news comes out on BNB, you know who's going to pick up the phone. There it is, chat. There it is. Daily candle closed. Kind of a nothing burger candle. Yeah, I mean, just looking around some of these, look at Litecoin still below 66. It's in a lower high locally. Hidden bearish divergence kind of there too. News didn't help. What would help? I don't know. I don't know what would make this go up if what happened today didn't make it go up. Yeah, it's just like, I don't know how you stare at this. And you know for a fact how respected this level is from history. It's just August 2018, October 2018. And it's like May of 2019, November 2019, August 2020. Look, August 2022, September 2022. Then it like flipped to December 2022, March 2023. And now it's resistance again. And it's like, if that's not good enough, I mean, if that's not a reason to like be cautious and understand like what the potential downside, then I don't think anything is. I mean, 25% downside if this is real. If this is a real formal bearish back test for the second time. Which, hey man, if there's no fall through, the drawdown, rally happens, you get back above 66, cool. All right, let's talk about it when that happens. It could happen any day, I'm just saying. You're not breaking it. The buyers are trying and they keep failing. Okay, look at Coca-Cola, sorry, because that's like in the stream chat. Here's your Coca-Cola, lowest daily candle close since October 2022. I mean, getting closer to 52-week lows, but just the bearish Gartley, and then the V-shape. The V-shape rivaled the previous high, but was still lower than the pattern completion zone of that bearish Gartley from August 2022. Lower highs, another high that is also lower than that high slightly. That is confirmation. So you had a high, then a low, then a lower high, then a lower low, then a lower high, then a higher low. But remember that the trend had reversed. And so the same high, and then slightly higher low, and then the lower high, and then the lower low. And now you're working on possibly making the lowest low. So yeah, you got to pay attention to that. Never recapture.
Hello, Mr. Bogendoff. Please dump it. Dump all the BNB. Dump all the wheat. Dump Disney. Hold the OJ and live cattle for a small bit. We need to get that second Miami penthouse. Because business. Also, don't forget, we called the Hex scam 2.5 years ago.
What's up, Shadow Mitch? Thank you, dude. Remember, I'm not really like one to say calls, even if like the TA was respected, you know, on a bearish back test of key inflection points. It's not like I'm never, it's not, this isn't about ego or like, oh, I'm so cool, dude, or I'm so smart. It's not, none of that. I'm not smart. I mean, I think I'm kind of cool in terms of like easygoing, but right, there's just no ego here. That's just the last thing you're gonna get, unless we're spinning the wheel, the arrogant wheel, then it will be pulled out. But yeah, there were like indicators of things back then. Yeah. Okay, but I didn't. I am just a disciple of traditional technical analysis. I didn't make the rules. I just follow them and respect them. Anyway, $56. And yeah, $56 a gap fill that seems very likely. You'll fill that. It's an inflection point from 2019. It was a peak. Clearly, it's been a level respected. You think you test it again, but you can almost say like it seems like it's kind of over. The trend's been reversing. Coke and then McDonald's was another one that had a pretty big drawdown today, a decent drawdown today for it being McDonald's. It's down not 0.9%. I know. Fell below. I mean, this is concerning, right? This is the line in the sand, the old all-time high from January 2022. The price is now trading below that, and a formal bearish back test. When it was once resistance, it has formally become resistance again today. Not yesterday, not Friday, today. It had not traded below that level. It had not done it since March of this year, and now it's back below it. But remember, like, this price action, local price action, is so incredible. Like, oh, you double top. Okay, that tells us like a confirmation that it tops in. But you know, drawdown occurs. That level could be defended, and you could come back and make an 886. You could take that level out and rally higher. But then you see the price action, the substantially lower high than previous high, and then a lower low, another sign of weakness, and then another rally, and you reverse back below the neckline, the double top with two highs there. It's like, and you got, look at these back tests, beautiful, and then lower prices. Let's check on the big boys, other big boys. Here's your Apple, still just trying to, I mean, it's just flirting with this August 2022 175 level. It goes back to January 2022, like right there. Yeah, you're just right up at that level. I mean, there is almost bullish divergence, like bullish convergence here. I mean, I can't, like on something like Apple, I can't really be surprised if this played out where it reversed to the upside here at one low. No one knows. Second time, everyone knows. But hard to have confidence because until like 182 is breached, you know, because that's like the old all-time high from 2021. They're just looking at it up 0.74% today. It's trading at the same price it was trading at in August, mid-August, like over a month ago, 5 weeks. Apple, Microsoft, remember, just put in its lower high. It's just sitting at a support. Whew. Right, I mean, that was the old all-time high from 2021, but then there's another inflection point from January 2022, April 2022. Tested once, reaction, but then the most recent data was the lower high. Like, for real, candidly speaking, the first lower high of the year of 2023. That's the first one. It's marked right there. And now you're right back at the support. And depending on if there's demand, I mean, this could be like Apple where, hey, it holds and we rally and make a larger wave up to test 350 again. But you're just sitting at that level. And on Friday, Friday you made your lowest daily candle close since like May. And today you open lower than that, or at that low from Friday. And you actually went a little bit lower before rallying. So, okay, could be like, yeah, head and shoulders whacked out, really strong head and shoulders, right? Any right shoulder that is lower than the left shoulder just signifies and represents there was such a lack of demand that the buyers were unable to rival that level. They were unable to rival and test that previous 2021 peak. That is a sign of weakness for sure. Super subtle and hidden bearish divergence. Oh yeah, look at your highest high, and then your lower high with higher levels of momentum, hidden divergence, and pending price action continuation. That played out, but hasn't really performed too much yet. Sitting at support. Amazon had an okay day today as well. I mean, like up 1.67%, so that's like okay, but you know, it's still kind of spinning its wheels in the mud. There's a gap that is unfilled at 135.50. Pretty much another 140. You're just up there, like, so I don't know. I mean, like, what do you want from me? We identified the piercing line reversal at a key inflection point after the inverse head and shoulders developed. I mean, that was an entry for a trade. The easy to manage risk. No idea if it was going to play out or not, but it was certainly a level, and it ran up. And the first target of that trade was 135, and the second target was 144. 2 of the 3 hit. And no idea what's going on next, right? No clue. I mean, as long as you stay higher than 126, you probably put in a local higher low. You know, it's almost like a right-angled ascending broadening formation, you know, like in the making, possibly. Look, you've got like an up-sloping resistance, right? And then a horizontal support. Inherently a bearish structure. That's a failed. Yeah, you could never see the top. I don't know. I mean, I'm not trying to even get too complex with it. I'm not really that worried. I'm not trying to call a top on Amazon. Okay, Amazon, Microsoft. Let's go to Google. or it had a rising wedge and had the bearish breakdown, but engulfed today. Highest daily candle close since the 20th, and not even like locally, you're still making a higher low than previous low, so it could just continue to rally. Yep, I mean, like there hasn't been really much follow through of the rising wedge bearish breakdown yet. I mean, it was so good, right? The bearish divergence near the apex of the wedge, but no performance yet. There's a gap fill at 134. I mean, you're so close. The price is so close to that gap fill that it could easily happen soon. Yep, no performance yet from the sellers. Not good enough. Okay, those are the big four. Looked at them, and oil stocks kind of coming back to life today after the kind of not so good week last week. Like we'll just knock it all out in one stroke of a chart. Here it is. Here's your XLE that completed a beautiful bearish Bartley. What a reaction! But then the massive engulfing candle today. But where it completed this harmonic is a 2008 old all-time high, a major reversal level right there. You are still currently trading below that, and you completed this harmonic, this beautiful harmonic. So, and the divergence is there, but it hasn't really performed. I mean, there's been no performance from the sellers yet. No idea if it's going to happen or not. We'll see what kind of follow through we get off after this engulfing candle today, tomorrow. Okay, well, been live hour 10 minutes, and I think that's about it for me today. So thank you for coming out. Appreciate it. Y'all have a good rest of your evening. Till next time. Respect. T.A.